Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Weibo Corporation, latest report. Weibo Corporation offers a wide range of businesses and services on its social media platform. At the core, it provides products that enable users to create, discover, and distribute content, including discovery, self-expression, and social interaction tools. The company also offers advertising and marketing solutions, such as social display advertisements, promoted marketing offerings, and promoted trends and search products. These solutions allow businesses to reach their target audience on the platform. In addition to these services, Weibo Corporation provides various value-added services, including content customization, copyright contents pooling, and user interaction development. It also offers back-end management, traffic support, and product services for better displaying and promotion of its account and content. Furthermore, the company has an open application platform that allows users to log into third-party applications with their Weibo account for sharing third-party content on its platform. This feature enables seamless integration between different services and enhances user experience. Weibo Wallet is another key service offered by the company, which enables platform partners to conduct interest generation activities on Weibo, such as handing out red envelopes and coupons. Overall, Weibo Corporation's diverse range of businesses and services makes it a comprehensive social media platform for both individuals and organizations. Weibo Corporation maintains a market capitalization of $19 billion, broadly in line with the industry peer group. Weibo Corporation trades at a lower price-to-earnings ratio of 6 times and a higher price-to-book ratio of 0.61 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price-to-book value than it peers. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap, and if it would be better to be investing in its peers than Weibo Corporation itself. The company maintains a moderate leverage profile, with liabilities making up 45% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. Although shareholder equity has increased, the share count has risen while revenue is declining. This raises concerns that equity growth may be driven by dilution rather than business performance. The sustainability of the business model remains unproven. The company have a dividend yield of 8.26%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth or decline can be identified through a review of the key factors that have impacted an organization's financial performance. On the positive side, advertising and marketing revenues have experienced a significant increase of 5% year-over-year, driven by robust growth in user scale and search queries of intelligent search functions. Additionally, strong performances in certain key industries within the advertising business have contributed to revenue growth. Furthermore, decreases in various expense categories such as cost of revenues, sales and marketing, product development, and general and administrative expenses have also played a crucial role in driving revenue growth. These reductions have resulted in increased profitability for the organization. On the other hand, certain areas have experienced decline in revenue. Value-added services, VAS revenues have decreased by 2% year-over-year, while advertising and marketing revenues excluding Alibaba have declined by 4%. The relatively flat VAS revenues, which decreased by 2% in Q4 2025, also indicate a decline in this area. Overall, the organization's revenue growth is driven by a combination of increased advertising and marketing revenues, strong industry performances, and cost reductions. However, areas such as VAS revenues have experienced decline, highlighting the need for strategic focus on these key drivers to maintain financial stability. The company's net income experienced mixed results over the past year. While the fiscal year 2025 saw no change from the previous year, with a net income of $449 million, the 3 months ended December 2024 to 2025 witnessed a significant decline from $12,727 to $2,732. However, on a yearly basis, there was an increase in net income from $310,105 to $461,075. Profit margins also underwent changes during this period. The operating margin for fiscal year 2025 saw a notable improvement, rising from 19% to 26%. Conversely, the fourth quarter of 2025 experienced a decline in operating margin from 26% to 19%. Non-GAAP operating margin followed a similar trend, increasing from 21% to 30% in fiscal year 2025, but decreasing from 30% to 21% in the fourth quarter. The company's financial performance indicates a strong ability to generate cash from its core operations. According to the extracted summary, the company is producing positive operating cash flow, which is a crucial indicator of a company's financial health. One key metric that supports this conclusion is the cash provided by operating activities, which stands at $181.4 million, page 4. This figure demonstrates that the company is generating significant amounts of cash from its day-to-day operations. Furthermore, the operating cash flow is reported to be $519.5 million, a positive number that confirms the company's ability to generate substantial cash from its core activities. Overall, these figures suggest that the company is successfully managing its finances and generating sufficient cash to support its growth and operations. Management's outlook on company strategy: the company is shifting its focus towards a more sustainable financial model. One key aspect of this strategy is the remittance of earnings from wholly foreign-owned enterprises to fund business operations and potential investments. This move indicates that management is looking to optimize cash flow and allocate resources efficiently. In terms of performance, management is optimistic about the company's prospects. They expect non-GAAP operating margin to reach around 30% in the next quarter, a significant improvement from previous quarters. This target suggests that management is confident in their ability to drive growth and profitability through strategic initiatives. The company's financial strategy includes a commitment to returning value to its shareholders through dividend payments. Specifically, the annual dividend payout is set at $150 million, with each ordinary shareholder receiving $0.61 per share. This demonstrates the company's focus on rewarding its investors and providing a tangible return on their investment. That concludes the financial summary for Weibo Corporation. Feel free to comment below, and I will be happy to answer them when possible.